Google will release results after the close. To prepare, we're going to take a look at where consensus estimates stand ahead of this release. And to do this, we'll be looking at our earnings model. If you'd like to download it and follow along or plug in your own assumptions, visit our website, gutenbergresearch.com. Click on the Free Models tab and scroll down to the Alphabet model and click the button to download. And if you're new to our approach, from the home page you can download this document which goes through our entire financial modeling and equity valuation approach. So now let's take a look at our model. The most important thing to think about here is how we break out the earnings, because in the past we've always split it between ad revenue on Google websites and on network member websites, and then we've had this section for other revenue which we apply a quarter-over-quarter growth rate to. But they're going to issue new segment reporting this quarter, so we'll get additional details for the search network, and they're also going to break out this other category which they call other bets. And that includes access and energy, Nest, life sciences, and X, which is where the driverless cars and other programs in the incubation stage will be reported. So after the close, we're going to incorporate these new results and this new segment reporting into our model. So obviously expect a somewhat of a delay because it's going to take some time to get that all updated. In the meantime, it's important to understand the primary search network and how they generate earnings from that network, and also the puts and takes from an expense standpoint. So the biggest being the traffic acquisition cost. And also that's important to keep in mind too, whereas other sites may report revenue on a gross basis, on a net basis. We're actually reporting on a gross basis. So our cost of revenue actually includes the traffic acquisition costs, and then we deduct it out for total cost of goods sold. So if you're looking at our consensus estimates for revenue and saying that this looks a little bit different from some of the other sources that you're looking at, that's the reason. We think this is actually a really good quarter for management to change the segment reporting. There really was not a whole lot of detail around this other revenue section, and this quarter it's probably going to be a lot more important because they had the release of the YouTube Red, which was the advertisement-less YouTube viewing subscription-based product. So obviously this other revenue item is going to get blown out. Hopefully they give us some details on YouTube Red, because it's going to be important to see how much contribution that's going to have to total revenue in the future. And they did say they'd be giving some margin guidance and CapEx guidance by business as well, so that's going to make it a lot easier to model earnings going forward. So let's take a look at this quarter. We've got total ad revenue on the Google websites modeled at 12% growth quarter over quarter. And we've got the Google Network members websites ad revenue at about 10.5% growth from last quarter. Other revenue, we actually brought this one up just a bit to account for the YouTube Red revenue. And so we have it now at an increase of 8% from last quarter. Now with those growth rates in mind, we are getting back to the consensus EPS, or the consensus revenue estimate of $20.8 billion. Now let's take a look at our estimate for traffic acquisition costs. So we held it constant from last quarter at about 21.3%. And you can see from the last couple of quarters, it tends to stay pretty constant when you look at it on an attack to revenue basis. For the other costs of revenue, we have that declining just a bit from last quarter. So we go from 18.6% to 18%, which is about the midpoint of what we saw in the first and second quarters. Next we move to OPEX. So there's some puts and takes between the different OPEX categories, so R&D, sales and marketing, and G&A. Overall, we think it's going to be a strong quarter for operating margin, and we have it increasing from 32.9% last quarter to 33.5% this quarter. There could be a little bit of variability here depending on where the sales and marketing expenses come in for the YouTube Red rollout. So this is one area we'll be watching closely on this call. And the last two items that we have to model out are interest and other income and effective tax rate. We left both of those consistent with the last three-quarter average, so no big surprises there, hopefully. So when we plug all that into our model, we come back to the consensus EPS estimate on a diluted non-GAAP basis of $8.10. So now that we have our model calibrated to meet consensus estimates, let's take a look at the valuation heading into the release. So we value Google using a next 12-month consensus EPS price earnings ratio, and that's on an ex cash basis. We're valuing the cash separately here. And we are not doing a discounted cash flow valuation. This is a tier 2 model, so no DCF here. So heading into the release, we are about at the average next 12-month PE ratio of 21 times. And so we have a price target of $765. And keep in mind that this will change after the release. We could see some multiple expansion or contraction depending on if there are any new risks that emerge out of this release. So be sure to check back after the call. We'll update this model for the new segment details. We'll plug in the new results for the December quarter. And if management does give us any guidance on any of those segments, we'll put that in as well. Also join us this week for the Ferrari release, the GoPro release, and the Yum Brands release. And if you're interested in financial modeling, be sure to subscribe to our channel. Thanks for watching.